Today, we're going to be talking about yet another polarizing topic as it relates to the real estate industry, not just in Bend and Central Oregon, but nationally. Of course, if you've been paying any inkling of attention over the last 10 days or so, what you are now aware of is the term 50-year mortgage. In fact, you probably have three or four great friends that you didn't even know were good with numbers that all of a sudden are now amortization schedule experts, and they talk about the difference between, say, the life of a 30-year loan and the difference between interest payments of a 50-year loan, and talking about how it just is absolutely a catastrophic financial decision that you could make if you were to consider that. Well, the reality is that the 50-year mortgage is a proposal. It doesn't mean that it's set in stone. It's not going to negate you from being able to use a 15-year mortgage or a 30-year mortgage or some other creative form of financing to go purchase a home. It just is a proposal of an option for those that are having a hard time maybe qualifying today in the current state of the market. And that's all this vehicle really is designed to do. But because a certain someone in the White House decided to announce it himself, it's now a polarizing political topic that just gets swayed back and forth, back and forth. And frankly, it's his fault if you don't like it, and it's a great idea if you do like him. And that's just the funny part of the way the world works, especially in a divided economy and country that we live in, which is sad, but that's the reality of the matter. Let's get back to the nuts and bolts of what the 50-year mortgage really is and what it could offer to those that are having a hard time or those that want to exercise the option. That's all it really is an option. So a 50-year mortgage, okay, yes. 20 extra years of principal and interest over the course of a life of a loan. Currently, a 30-year note is the most popular form of getting a mortgage, 360 payments. Did you know that the 30-year mortgage was a proposed option back in the 1930s as a way of breaking out of the Great Depression? Did you also know that it was a very, very polarizing topic back then as a means of trying to extend the payment structure of a mortgage for those that couldn't otherwise afford a home coming out of the Great Depression? Most of us weren't there in the moment, but maybe we have a grandparent that could tell us about what that was like when the 30-year mortgage was first introduced in the 1930s. Frankly, it didn't become a fixture until the 1960s. So it was slowly gaining traction as time went on. But by the 1960s, it became the modern and most popular way of financing a home. 360 payments. 9 out of 10 mortgages are 30-year mortgages in today's lending world. So you can imagine just the traction and just the time it took to really become accepted and become the norm. Will a 50-year mortgage do something similar? I don't know. I tend to think not. I tend to think that most people will still opt for the 30-year mortgage just because it makes more sense from a financial standpoint, especially those that can qualify for it. But I'm not expecting those that are looking at a $2 million house to ever try and finance something with a 50-year note, unless they're not thinking clearly. That could be the thing that really kind of makes it a little controversial. But I tend to think those that are in the market for a $2 million house are in that market for a reason. They've been relatively responsible with their finances leading up to that moment. But what can a 50-year mortgage really do for somebody? And in what kind of situation would that really look like? Well, frankly, first-time home buyers. Right now, the current average age for a first-time home buyer is, wait for it, 40. 40 years old. That's kind of the oldest age for a first-time home buyer maybe ever. I can tell you about 5 years ago, it was about 32. So we've gone 8 years. We've extended it to like 8 years beyond what the average age was just 5 years ago when rates were where they were at. Right now, rates are stubbornly high. Home prices remain stubbornly high. They're coming down. People that are in the market right now, they're taking advantage, but it's still leaving plenty of people on the sidelines because it's still a very, very frustrating time for many. So, a 50-year mortgage, can that really do something different for, say, somebody that can't quite qualify for a 30-year mortgage? Well, let's take a look at that. We're going to do a little amortization calculator exercise here in just a second, but that's kind of the nature of what this proposed product is. And that's all it is. It's a product. When you're shopping for a car, do you go to the first dealership and see the first car and talk to the first sales rep and then buy from them? Or do you do your due diligence, maybe look at a few cars, go to a couple different lots, play the game, sleep on it overnight? That's what you do when you're shopping for money too. You can go explore a 30-year note. You can go explore now a 40-year mortgage. Those actually do exist already. They just don't talk about them a lot. But now a proposal of a 50-year mortgage. Go see if that makes sense. Who I see it working for is, say, somebody trying to break into owning a home. And the stresses of, say, being a young family or a young person who is trying to put down some roots and having a hard time qualifying for a mortgage in today's traditional environment. This is who a 50-year mortgage is going to be targeted towards. This allows them one other option to maybe get their foot in the door. That's what this is, a foot in the door. You're not going to pay the entire life of the loan. Of course, you could, but the majority of 30-year mortgages don't go the distance, 360 payments. So why would the majority of 50-year mortgages go the distance? What happens in between, say, first payment and payment 360 in a 30-year mortgage? A lot happens. Hey, if you guys are getting ready to jump into the market in some capacity, whether you're buying, whether you're selling, whether you're doing a combination of the two in the near future here in Central Oregon, and you don't have a realtor lined up yet, please reach out to me. We would love to be the ones that help you with that transaction. But it starts with you guys calling us or texting us. You can see the phone number right there. It's all across the channel as well. Give us a call or shoot us a text. We'll get that initial conversation on the calendar so then we can figure out what the next course of action should be pertaining to your real estate transaction. Thank you guys for watching these videos. And now on to today's content. The house goes up in value and the owners end up selling it. Or they end up seeing new interest rates coming down, so they refinance out of it into a new mortgage at a lower rate. Or, I mean, there's an array of things that happen to the point where only 1% of people that qualify for a 30-year mortgage and use the product end up paying all the way through 360 months. It just doesn't happen that often. Why would anything be different with a 50-year mortgage? It's not going to accrue that way for the masses. And so that's the big polarizing topic from one side of the aisle, is that the amount of interest that somebody's going to end up paying over the life of the loan is going to ruin them financially. Well, frankly, if you did the same thing with a 30-year mortgage, you wouldn't be that far behind in terms of it ruining you. Not many people do that. In fact, the average age of a 30-year mortgage before something happens, like say a refi or a sell of the home, is about 7 to 10 years. That's as long as somebody really holds a 30-year mortgage. And so again, going back to the 50-year mortgage option, it's just not going to be that often where somebody has to exercise 50 years. They're going to do something different. They're going to have so much equity built up in it by year 30 if they're trying to go the distance that they just refi or they do something different. I mean, it's just the way it is. And 30 years goes by and like the entire world is different. So again, it's an interesting topic. It's a fun little, water cooler talk type moment. But the reality is most people that are acting like they're amortization experts right now, they don't know what they're talking about necessarily when it comes to just the behavior of most consumers when it comes to, say, borrowing money and purchasing a home with that borrowed money. So let's share our screen and do a little exercise just to get a feel to see if it would make sense. Maybe you can decide for yourself based off of this scenario if you would exercise a 50-year mortgage, but just, keep in mind what the situation is for most that are in the market for a 30-year mortgage. Okay, so we've got our trusty dusty mortgage calculator up here on the screen, and we are going to apply it to Bend and Central Oregon because that is where we're at. And clearly, the cost of living in Bend and Central Oregon is high, relatively high compared to many other places in the country. Like this calculator thinks that 250 is going to be a good starting point. It might be for many other areas, but certainly not Bend. We know this, especially if you've been looking for some time and you're dipping your toes in the water. But let's use 500,000 as our barometer. It's about the median home price for a home in Redmond. Prineville's good. That's over. And then other areas in the county are great. Lapine. But Bend, there's probably 100 single family homes right now in the $500,000 range for sale in Bend. And so this would be a good little starting point for a first time 40-year-old homeowner. first time buyer. Yeah, I know it'd be frustrating. Let's use 10% down as a means for a down payment, and then we can kind of go through these numbers. 2,500 for property taxes. We're going to bump that up a little bit, not that much. And then we're going to go down HOA. We're going to say no thanks. We're not going to do an HOA neighborhood, and we'll do homeowners insurance. We'll call it the same. Yeah, 1875 is fine. Let's go with that. Okay, we'll go down to the term of the loan. Amortization experts, please weigh in. What is missing here? Oh, it's the interest rate. That's right, 3.29%. Wouldn't that be fun? Okay, we'd be looking at 24, about 2,500 bucks for total monthly payment at 3.29%. But that's not the case. That's no longer our reality. Let's go up to 6.2%. And let's remember that we're amortizing 450,000 because we put down 50,000 of our own for a $500,000 purchase. So what do we got here? We have $2,767.80 a month of principal and interest, not counting our property taxes. We add those to the mix, have insurance costs as well. And so now our monthly payment is roughly $3,300 at 6.24% of an interest rate amortized over 30 years. Remember that number, $3,300. If you look at the amortization, it shows you here. See, everybody's an amortization expert now all of a sudden, which is fun. But let's go back and just play with this for a second. Let's make it 50 years. Okay, we're going to adjust it to 50 years. $3,300 a month is the current price for a 30-year note. All we got to do is adjust it to 50 years, but there's one thing we have to change too. I'll show you in a second. But if everything else was the same, if you somehow were able to maybe buy down your rate or get the same rate at 6.24%, you'd be paying just under 3,000. So you're saving $320 a month. Now, $320 a month times 12, that's over $3,600 a year. I mean, that adds up. And that is probably something that could allow certain people to break into home ownership, control a property, get your foot in the door. And then as time goes on, maybe your financial situation changes, maybe rates come down, you can refinance, you can do all kinds of things that would allow you to get out of that 50-year mortgage. And that is the point. It is simply a way to get your foot in the door if you're a certain type of buyer in a certain type of situation. And for 40-year-old first-time home buyers, that's where it's trying to help you. And that's a good thing. But let's just do one thing real quick. There's a chance that your 6.24% rate will not be the same from a 30 to a 50-year note. So let's just bump it up a little bit for the sake of this exercise. Remember, let's call it 6.54%. Remember what we were doing. It was 3,300 bucks. Now with a slightly higher interest rate, it's 3,081, and we're looking at, say, a savings of $220 a month. All these things need to be into consideration. This is a polarizing topic. Some people think it's absolutely like just stupid to go about a 50-year note if you're going to pay all that 50-year interest just to save 200 bucks a month. Well, I'm on the other side of that spectrum. I believe that if you can get your foot in the door, you can learn how to control a property, get to a point where you can control a property for a little bit of time. It motivates you to do things differently in the future. It motivates you to maybe get out of that situation, but it also gives you that sense and that pride of ownership. Okay, you accomplished a huge goal. This is the American dream that everybody touts, everybody gets marketed to with this theme and narrative in mind. And all of a sudden now, a way to get you in there that otherwise was preventing you, that can help you get to a point where you're achieving a level of peace of mindedness, right? I mean, there's a lot of young families out there that their biggest stress is where are they going to live with their young family? Well, now you can purchase a home potentially if you're the right fit for this vehicle. And that is the point. It's not about fulfilling your amortization schedule because, again, most do not. Most 30-year notes do not even get that close at all. But if we looked at, say, the history of the 30-year mortgage, what we're going to learn is that it was something that was introduced in the 1930s as a means of helping those struggling human beings get out of the Great Depression. And by the 1960s, it became the absolute norm. 9 out of 10 mortgages to this day are 30-year notes. But this was a very polarizing topic back then as well. But what you're going to see now is polarization, 50-year mortgage, just a simple term typed into a Google search bar, and we see it all over the news. And a certain polarizing human being is probably the culprit for this being such a left or right or back and forth type debate. It's just a vehicle, people. Just an optional vehicle. That's all this is. It's something that somebody who maybe wants to explore this can do so, and they can decide if it's a good fit for them. In fact, since this whole thing was proposed 10 days ago, now there's data that suggests about half or just under half of millennials, a lot of which are having a hard time purchasing a home and kind of getting ahead, are willing to explore this option as a means of getting into a home so they can control it. Now, the boomers are against it, of course. They own their homes and this, that, the other, and their average age for buying a home was like 25 or something ridiculous. That was a different era. Okay, I'm a millennial. I can empathize with millennials. And the boomers, they have a different opinion about many things, and that's fine. But you lived in a different era at the age of 25 or 30 or 40. So again, it's always entertaining. There's always something to talk about. There's always one side or the other. And that's what I love about real estate because it's kind of a driving force. Home ownership, all things kind of just cascade left or right as a result of where the affordability is and what the interest rates are and what the median home price is, all those things. But if this is a way for somebody to get on board and help them kind of get ahead to the point where now things are different after the 50-year mortgage versus before, then by all means take advantage of it and enjoy what it can offer you as an option. You don't necessarily have to take that route, but if it is presented to you and it works and nothing else does, then maybe consider it and then go about your business accordingly. Again, this is my rant on the matter today. I know a lot of people have their opinions, which is great. My name is Ryan. I'm a licensed broker with eXp Realty. Thank you for watching. And if it's your time to reach out, please do. And we can start the process here in Central Oregon. Thanks again for watching. We'll see you on the next video.